Hey everyone, and welcome to this special episode. So, in this episode, we have as a guest, we have our father, our mentor, Rahul Goela, CA. And this will be a special episode. Why? Because these circumstances, this current scenario we're in is actually very extraordinary. So, thank you so much, Rahul Goela, to take out that time to actually help all of us out in the current
Yeah,
complex situation.
happy to be here.
It's a great pleasure of us. So what we are going to learn or what we are going to talk today is about the current market scenario, specifically from the war angle, because now I see that things are intensifying quite a lot. I mean, generally people thought that it won't go in this situation, but ultimately we are in this situation. People are also calling it World War III. So that's something to worry about, and also markets are tanking, which is pretty much expected in terms of war. So, that you tell us exactly first about the Russia versus Ukraine war. I mean,
Actually,
little more about it.
basically, yeah, hi. Basically, Russia has attacked Ukraine because Ukraine was showing tendency to join the NATO countries and the European and the American gang.
Right.
But Russia didn't want that. If Ukraine had joined that gang, then the US or the European army would have been just on the border of Russia. And historically, Ukraine was a part of Russia, the old USSR.
Right.
So to avoid that conflict in future, they have decided to acquire Ukraine and keep their boundaries safe. So it is nothing to do about Ukraine. It's a war between USSR, European countries, and Russia. They don't want these powers to enter Ukraine. Ukraine is just a outcome of the war between these two superpowers, Russia and the rest of the world.
Right.
So poor Ukraine has done nothing. They have not even provoked them. But the situation is such.
So, I mean, what do you think कि ये जो current situation है कितना और लंबा चल सकता है क्योंकि
Okay, I'll explain you. I want to show you a chart. I just want to show you a chart.
wait,
You'll understand how long will it last. I mean, everybody can see this?
yeah, everybody can see.
Now just imagine in 2014, Russia had attacked Ukraine where it acquired Crimea, a part of Ukraine, but it missed out the major part of the country. So Putin's plan has been to acquire Ukraine much before 2014, and after 2014 the intention has continued. Now I'll tell you how deep rooted this war is going to be, and the outcome is what it is. See, now the thing is how Russia has prepared for the war. Now this first thing is the gold reserves since 2014.
Right.
The second chart is the external debt which Russia owes to the world
Right.
in dollar terms. The third part is showing the Russia's dollar reserves. Okay. Now what has happened? Putin has predicted everything very well. What America has done today, it knew it long time back. Now to fight with Russia, European countries and America have put in sanctions where the Russian foreign currency in dollar terms has been frozen. No, they have passed sanctions that nobody in the world should trade with USSR, Russia. Nobody should buy oil from them. So Putin knew about all these things. Anybody would know as a country, and this is how they have reacted over the last year. So they have converted all their dollar reserves, which could have been confiscated and frozen since 2014, into gold reserves. So you see gold reserves rising.
Correct.
And on the other hand, the dollar currencies have contracted nearly
Right.
zero level. So now he's prepared for the war because financially and economically the impact will be little less. And now the middle chart, which shows the external debt. This debt is the foreign currency borrowing by a country. So just imagine there is no foreign debt. Now, if there was a foreign debt, so due to this war, ruble, which is the Russian currency, would have
Depreciated.
depreciated.
Right.
Now, to repay the foreign debt,
it would be like a very big cause for Russia to do.
It's a nuclear bomb itself.
Right.
So Putin has prepared for all these 10 years to do this war. So this war is will not be a compromise. Putin will do what it takes to acquire Ukraine, even at the cost of a nuclear threat or a real nuclear war. And that is why NATO and America are not trying to push themselves in, because they know Putin's idea is very clear. He will go to the extent of a nuclear war. That's why they are saving themselves. So Ukraine has to go to Russia. It will merge in it, and the rest of the world will just keep watching it. So the end is going to be like this. So it's going to take time. It is going to take time.
Right. So generally, what many people are thinking that these kind of things do happen, but ultimately karte karte kuch compromise hota hai and everything gets settled.
Yeah.
So I feel that this time it might be a little different.
Different, because see his planning in the 3 charts. See his planning.
Right.
You know, it is a plan to acquire. It's in the last 1.5 decades he's been doing that. So it will end like this, in a very bitter end, according to me.
All right. So now we've seen that now ultimately ये है कि Russia is pretty serious about this particular war, and they are also of course they have the upper hand here. So I don't know how things would work out. But what about the economy, the full world economy? How will this particular thing, if this is so serious, how will it affect the economy?
See, we'll go behind this war itself. The world was already slipping into high inflationary situation,
Right.
and a slow growth situation before this war.
Right.
America had seen an inflation rate of 7.5% in the month of Jan. 7.5% is 40-year high. No, what I would think, if the interest rates are high, if the inflation is that high, the interest rate should also go up. Otherwise, the real rate of interest is absurd. The value of money is gone.
Right. Correct.
Right? So we are already behind the curve for increasing the interest rates vis-a-vis the inflation. Right?
All right.
So we were already in a high inflation rising regime, and the growth rates were also slowing of the GDP. After this war, what is going to happen? The inflation is going to rise further, because Russia and Ukraine are big time suppliers of raw materials of so many things. They are not two small countries. I mean, Russia is equal to the entire Europe, and Ukraine is the biggest country in Europe.
Yeah. Correct.
So what we were, if you think, like if you go buy a camera or a laptop, they are not available because semiconductors and chips are not available. This situation is going to get 3 times worse.
I think semiconductor and chips problem was there for quite a lot of time. I think this will make it even worse.
So inflation is going to get worse. Russia is a big supplier of wheat, agrochemicals, coal, oil. Look at crude oil, it's $114 today. So inflation will rise further, and due to sanctions imposed on Russia and all these geopolitical tensions will slow down the GDP growth of the GDP even more. So from out of the frying pan into the fire is the situation, according to me. This is the impact on the global economy.
All right. So
I mean, it's nearly a world war. Don't think it's a small thing.
right.
It's nearly
Practically a world war.
world war. Yeah.
So now we've seen that war can actually go in a pretty bad way. Economy is also not looking good, specifically from the interest rates point of view. So what about stock markets? अगर ऐसी situation हो तो stock markets तो can go very very low as compared to what they are right now.
See, if inflation goes up, interest rates should go up, which we have not been raising the interest rates, because people have been thinking, because the economy is slow, growth is not happening. So all the reserve banks of the world and governments don't want it to hit the economy. So they have pulled the idea of not raising interest rates for all this while. But the time has come. Inflation has become more important than pushing up the growth rate. Now, what will happen is, if interest rates go up, like it is said, interest rates are the gravity to the stock markets.
Correct.
They pull the valuations down. Why? Because if interest rates are high, future cash flows reduce. So if you bring down the present value of all the future cash flows, they'll be less.
Right.
And the valuations of the company are as per the current future cash flows as per the present value.
Right.
So market automatically, these valuations will not exist. So therefore the PE ratio will also come down because of the poor future growth rate expectation. So if the expectation growth of future is less, PE also comes down. And if the economy is not doing well, the earnings of the companies will come down, or the earning shares will come down. So earning per share and PE, when both come down, can you imagine the double impact? How the markets will impact the prices?
Correct.
So I think inflation is going to be terrible for the markets, because if inflation happens, interest rates go up, the liquidity available in the market will come down. If liquidity is not cheap and easily available for me, I may not buy a car. My consumption comes down. And look at the way automobile sector is already falling with the last 3 months. So if my consumption goes down, the GDP goes down, unemployment starts up. So it's for sure, it's not a good thing for the market. In the short term, anything can happen, yeah, anything can happen. But we are talking for an investor point of view. We may see difficult times, but one thing is also clear, that war is the last, is the bottom of the whole market cycle bottom. Post war, the markets will shoot up because country has to redevelop. A lot of investments will happen. Real estate will have to be built. Money will flow in. Capex will happen. But before that situation happens, how further down we'll go, time will tell.
All right. So one more thing, that during the World War II,
Yeah.
after that actually market shot up.
Yeah.
So are you just talking about that कि every time जब ये war होती है तो market does go down, but it again goes up again?
Yeah, markets are permanently in a bull run, because our standard of life will continue to improve. Yeah. Today, I mean, my father was using a small car. Huh? He was happy that time. But I have used a bigger car. You guys will use even a bigger car. So the standard of life will continue to improve. Maybe there is a, like in earlier, before 2000, IT sector was not there. IT sector came in, it boomed. Then maybe EVs come up, or maybe e-commerce comes in. So index will continue to rise. So there's no doubt about it. So post-war, a lot of investments will have to be made. Fresh money has to be, employment opportunities will crop in. It's going to be super boom time.
All right. So one more question, which actually many people are talking about, is the crash. People are really fearful of this 2008 crash जो पहले हुआ था. And of course, I'm sure कि आप उस समय you were there, and it is not a very good situation for anyone. तो do you think कि हम अभी बिल्कुल उस brink पर हैं, and the next few months में हम वैसे टाइप का कोई situation देख सकते हैं?
Okay, I think I'll be able to explain. I'll make a chart and explain it.
ठीक है. All right.
So basically, I'm just making it like that. Just this was 2000, the IT boom, right?
Right.
The index was, I think, I'm talking in terms of Sensex because I'm used to Sensex. Sensex was, I think, 6,000 points here, and at the bottom of it, it came down to, I think, about 2,000. Then in 2008, the Sensex was 21,000. In 2009-10, it came down to 7,000. Then 2000, it took. So what I mean to say that then again in 2021 October, it was 62,000. I just want to erase this. Chalo, forget about this. So I'm talking about these three cycles. So whenever there is a problem, it takes time for the market to come up. From 2000 to 2008, can you imagine? It took 8 years to cut the peak. From 2008 to 2021, it has taken 13 years to really break the peak to come to 60,000 levels. Now at 2021 October, we hit a peak of 62,000, and we are currently around here at around 54,000 Sensex.
Right.
Huh? If history has to show us anything, if history is to be believed, if it makes any sense, which I think it's very important, because this is like market cycles, the markets could come much lower before they make a new peak. Of say, let's say 1 lakh.
Right.
So, but we may see trouble. So therefore, at this point of time, we have to be very selective in stock selection, and we have to be very selective with our investing. We can't go overboard. We should not have leverage positions.
All right.
But long term, yes, we will win if you have a good quality stocks. That's it. So I would say the markets may not be able to beat the bottom for the next 1 or 2 or 3 years. Let's see how it works out.
Wow. That's true. So, जैसे आपने कहा कि there you have to actually find the right shares. So generally हम देखते हैं कि most of the people have like very penny stocks and all because अगर market बढ़ जाए तो वो shares तो बिल्कुल triple होता है within like weeks and months only.
Yeah.
तो as of now generally अगर आपके पास कोई पूछेगा कि किस टाइप के stocks होने चाहिए किस sector में होना चाहिए so anything which you would advise some other guy.
Okay, I'll explain this a little this way. Can I make it? So you see, I'm making another chart here. See, when the market starts to rise, all the penny stocks, let's say, are 1 rupee, super big stocks are 100 rupees, something like that.
Right.
So both these, all the shares are completely, they get undervalued much below their true intrinsic value at the bottom of a market cycle.
Right.
So towards a mid rally here, even the penny stocks must rise because they are also undervalued. Correct. So let's say 1 rupee stocks becomes 10 rupees, it becomes a 10-time multi-bagger. So for a retail investor, it's a jackpot.
Right.
But and even this, I can tell you one thing, would become 1,000 rupees. But we prefer to buy a 1 rupee stock because we can buy much more stocks in the same amount of money. It gives you a sense of satisfaction, because everybody's buying that. You're a part of the group. Now after the mid rally, this is what I'm trying to tell you now. We have crossed the mid rally. Here, these stocks will stop that same rate of growth because their strength is over. The last stocks are getting bigger market share. They have the quality to give. They can give a better service. So these continue to rise.
All right. Right.
So penny stocks, I think, absolutely have no future for the next 2 or 3. They can only reduce in terms of value. Good quality stocks, which we can fix parameters which have been growing by a cumulative compounded annual growth rate by 15% or something, will continue to grow, but they will also come down. But ultimately, they will rise beyond 62,000 of this thing. So penny stocks is a big no.
So as of now, I think ये तो बहुत clear है कि अगर आपके portfolio में by any chance if you have any penny stocks या बहुत small companies, so it is best to come out of it right now.
Right.
And at least go into good stocks, if not actually come out of equities.
Yeah. What I mean is penny stocks should be out of it because after the bottom is made, when they start rising, these penny stocks may not rise because they're not strong enough to see the world bad economic condition. They might die out.
Correct.
So we have to be in good quality stocks to stay in the market for over a long period of time.
Alright, so ये तो हो गया कि good quality stocks से shift करना चाहिए तो जो भी आपकी portfolio this is a good time to actually rebalance things. अब आते हैं technicals पर क्योंकि actually technicals के हिसाब से जो हमारा death cross है which is basically an intersection of 200 DMA and 50 DMA. मतलब 50 daily moving average और 200 daily moving average whenever they intersect तो उसको basically हम death cross कहते हैं and ये this actually signifies कि पूरा जो हमारा secondary trend होता है of the market, it has changed. So we've got multiple indicators including Dow theory, including moving averages, including death cross कि अब change हो गया है indicator for the full economy, not just India but US also, Nasdaq and all. So what do you think कि exactly is the market going down या फिर what?
You see, we must follow the largest country, that is USA, and maybe Europe, you can include it. That's 80% of the world GDP, roughly.
Right.
So whatever is happening there, we are a small, tiny country in terms of GDP. As a GDP share in the global economy is 3%.
Right.
So let's not look at Indian thing. Whatever happens there is going to impact us directly.
Correct.
So I think Dow theory has come in a negative zone.
It has.
So Dow theory historically has proved very well because you have to follow the Dow theory. If the prices come below the Dow theory, the index as per Dow theory, you must come out of it without using your mind.
Right.
Without using mind. It's very difficult to come out, but it is important to come out if you want to survive for long term. Earnings are reducing because of the sanctions, because of the inflation, because of the supply chain. And I'll tell you one thing. I'll just take another minute. From 2003, to 2008, there was a bull run.
Right.
Now I'm asking you, in that 2003 to 2008, gold went up, crude went all the way to $142, which it is not even now. Interest rates were highest in 2008 and lowest in 2002. Everything went up. Inflation went up, interest rates went up, gold went up, crude went up, commodities went up,
And real estate also.
But the markets also went up. So now the question is, when interest rates were rising that time, markets were rising that time, then what's the issue?
Right. Wait, guys, we'll be just back in a moment. Wait.
So basically, now let's continue. Basically, what happened was, I'll repeat the same thing again. In 2003 to 2008, interest rates had gone up, inflation had gone up, commodities had gone up, crude had gone up. So, and the markets also went up. And we are currently scared of interest rates rise. The crude is rising, inflation will happen, interest rates will happen, so the markets will come down. Now, these two times, why are they different? Why are these two times very different? The answer to this is very important. I think this is the most important thing. In 2003 till 2008, inflation happened because of the demand. People were buying more. So when you go and buy more, you're going to raise the prices.
Correct.
So is that a healthy thing? Is that inflation healthy? Yes.
Yeah.
Because it's being pushed up because of
High demand.
high
People
demand.
generally want
So,
that.
so the interest rates also have to go up. Now, when the inflation happens, interest rates happen, and there is demand, so the manufacturers and everything, they can pass on that extra cost to the customers.
Correct.
Because there is demand.
Right.
So but this time, it is not the demand-led inflation. It is the supply issues that are causing the inflation to happen.
So basically, there is not enough supply, and the demand is the same, but that is
There's no growth in demand. Demand is struggling.
right.
So therefore, if demand is struggling, there is no demand, so nothing should happen, no inflation should happen. But there is huge supply chain issues. So therefore, there is no supply of raw material, and that's why the inflation is happening. That's why we have to increase the rates. Now, can you imagine increasing the interest rates while there is no demand? So therefore, 2003, 2008 was a demand push, inflation and interest rates rise. This time, with weak demand, we have to increase interest rates. This is the disaster waiting to happen all over the world. This is what is happening in USA. So that's what I'm saying. What happens in USA has to trickle down directly, indirectly in every part of the world.
Right. So अगर demand नहीं है, interest rates अगर बढ़ाने पड़ रहे हैं, मतलब which is pretty evident कि बढ़ाने पड़ेंगे, तब तो economy can take a very very bad.
Yeah, this is what I foresee, and I'm scared about it.
Alright, makes sense. So ultimately, data बताइए कि as investors, जैसे generally people are doing SIP in mutual funds or whatever. So should that person stop SIPs or what is time पर?
See, I think SIPs must never be stopped. Same amount, same interval,
Right.
it has to be invested. But you should be matured enough to understand markets go up, they will also come down. And if they come down, they only come down to go up.
Correct.
It's a cycle. Because global economy is going to rise. Some sectors may vanish. Nokia phone vanished. Something else came today. But index will have good quality stocks and they will continue to rise. So what goes down has to go up. So SIP should be continued, keeping in mind that you might see difficult times, but those difficult times will vanish faster than you can imagine.
Makes sense. And what about a investor who's basically he has some more time and he's actually put in a decent good amount of money in stock markets? So what about him?
I think investor means who's not doing an SIP, who's doing lump sum investing or something like that. He's got stocks and all that.
Correct.
I think he should stop further fresh investments. Because difficult markets are very visible. They couldn't I have never seen more visibility about the future. I mean, talking about the short term of 6 months. So you should stop fresh investments and hold on to your existing uh, stocks, but they should be good quality stocks. I'm just warning, if they are penny stocks or if they are not good quality stocks, when the market starts to go up, they may not go up, because in adverse economic conditions they can't survive. But Nestle, even in adverse economic conditions, it will fight it out.
Right.
Right? Now the question is, supposing somebody has a lot of time in his hand, he's a full-time investor, like I have been.
Correct.
Like, what would be my strategy? Now I'm sharing you my strategy. My strategy is, since I'm looking everything into the markets, I'm tracking the war, I'm tracking the impact of the war on it, I'm tracking what Fed is doing, the China's Reserve Bank is doing. So for me, it is very clear the market cycle will play out quite clearly. And right now we are in the downturn part of the market cycle. So therefore, I think in long term also, a person who's full time into the markets, he should time the markets. Now, if Dow theory has given a signal to sell, to most of the shares are below their 200 DMA.
Right.
I will not like to hold my shares there. I would like to come out of the thing, park my money in some debt fund or an arbitrage fund, maybe gold. I like gold today, maybe gold, and wait for the market to bottom out and re-enter there. So a long-term investor also needs to time the market once in 6-7 years. I mean, I'm not talking about monthly buying and selling. In 6 to 7 years, when the prices from undervaluation go to unsustainably high valuations, with these kind of conditions, war, inflation, and which is a supply side inflation, not from the demand angle, it is worth the risk. It is worth it to come out of the markets and enter in for those people who are there, who are full time into it. But those investors who are doing a job and all that, continue SIP for investments. Don't add fresh investments. Continue existing investments, but be ready to see a lower side of your investments. Ultimately, you'll be going to be the winner, because India is going to shine. Even the world is going to shine. We'll have a better standard of living.
Correct. So overall, if we just ask that a question is this a time to sell? So according to you, yes.
Yeah, yes, it is a time to sell.
It is a time to sell.
Yes.
So yeah, you have to be very clear. And अगर आप hold कर रहे हो तो वो करो, and at least do not buy any more shares. That is one thing to keep in mind.
Yeah.
जैसे I feel कि generally what people in these current scenarios, what I have seen is that people buy at lower prices average करने के लिए. उनको लगता है जैसे कि अगर उनके पास एक शेयर है 100 रुपए का, अभी 80 रुपीज हो गया, तो दे बाय मोर शेयर, तो उनकी 90 रुपीज की प्राइस जाती है. तो ये साइकोलॉजिकल गेम प्ले होता है जो अल्टीमेटली becomes a very bad situation.
Yeah. You know what happens is that the only mistake people do, they sell too early or sell too late. Right now, and when they sell too late, as the market falls, they've seen the price on top. Let's say a share that had hit 100 rupees, now it's 80 rupees. So that becomes your anchor price. 100 rupees का share था वो तो भाई, अब तो मुझे 80 का मिल रहा है.
Correct.
And so on a falling market, every dip becomes a buy opportunity for them, and they keep averaging down, and that's what kills 99% of retail investors. Never average down. If the word average has to be used, it has to be said average up in an uptrend market. If you bought a share at 100 rupees, it touches 110, buy at 110. If it touches 150, again buy at 100. Even if it touches 200, you can still buy at 200. But when it comes down from 200 to 180, don't buy more. Even if it comes down to 30 rupees, don't buy more. Never average down.
Correct. So I think that is a very good lesson which everyone had now. So any last thing? So basically, now what we've understood is that market is not in a good situation. Economy is also not in a good situation. And probably it is best to come out of the market because it's not worth taking the risk right now. That is the main thing.
The odds are not in favor of investing.
Right.
Odds are not in favor of investing.
Correct. So the next question is, अगर let's say मेरे पास काफी पैसा है and I want to withdraw it from equities, तो is gold better or is FD better? आपके हिसाब से which is the best way to go? क्योंकि what I've seen is कि generally in very intense situations like war and all, gold actually appreciates quite a lot.
So you say gold and
Gold या FDs या
FD.
fixed income, maybe
Okay.
debt, maybe
So
arbitrage funds.
we are in a position where capital preservation is much more important than capital appreciation. Is that what we're talking about?
Right.
So we're talking about avoiding the risk. We are not playing the risk. We are playing safety. So capital preservation is 100 times more important than capital appreciation. Remove the word capital appreciation right now. Let us protect our capital. Let us save our capital so that this capital can be used in the markets to buy shares at half the price what they are quoting today. Now, where do we put this money? As a person, I've been in the market for nearly 3.5 decades. I would prefer to go into gold ETFs, a important portion of it, and some part of it I'll put it in arbitrage fund, which give around 5%, and the third part would be in FDs,
Like little FD.
little FDs. So I would say 25% in FDs, which again give around 5%.
Right.
25% of my wealth would go into arbitrage funds, Tata arbitrage, Kotak arbitrage, which again give around 5%.
Right.
And 50% I would be happy to go into gold as per my own personality and my thought process. You know.
Right. This is great. So I think हमने overall we've actually concluded the full thing. कि we've seen the full war situation, current situation. We've talked about it, how serious it is, and probably it will be. And we've talked about the macroeconomics. फिर हमने stock market की बात की. फिर stock market में as a investor कि आपको क्या करना चाहिए as of now from a SIP angle or investor angle. और now we also know कि अगर आप पैसा निकाल रहे हो अपने हाथ से stock market से equity से, तो where should you actually park your money? So I think overall we've covered all the things. So any last thing which you want to tell all the young investors out there in this situation को क्या करना चाहिए? फिर any problems you've seen that many people do in these situations जो हमारे viewers को नहीं करना चाहिए? Anything?
I think what is happening currently, everybody is thinking this war going to get over. It's only a correction. Indian economy is buoyant. Global economy is buoyant. We are in that frame of mind, and that's why we average down. But I would like to say, markets don't stop going higher till they go beyond you have. They go higher beyond you could imagine. They go to a level beyond that you imagined, which is called euphoria, which is the real bull run. And when they're coming down, now they go much lower than you could even dream in your sleep. Because only then, at that position, when they go lower than you could even imagine, there the market changes, the trend changes. So for the trend to change, you see, it can be a bitter experience. So keep that in mind. Talk about capital safety first, and it's not worth taking the risk. Odds are entirely against investing.
Right. So I think we've concluded in a very perfect manner. So yeah, guys, अगर आप हो, so please keep in mind and please take things seriously, and specifically अगर आपके पास एक बड़ा amount हो. So I think आज की conversation काफी interesting थी. We gained a lot of insight of everything we've learned today, specifically about the war and all. So I hope you liked the video and you like this certain podcast. Again, this podcast will also be uploaded on Spotify and Amazon. So do make sure to subscribe us there. अगर आप ये video देख रहे हो and you haven't subscribed to us, so please subscribe to our channel. We bring you amazing content with the people who are actually in stock markets, investing and trading in stock markets, to get the real experience what you can do and how to handle the current situations. So if you liked it, also like it. And this is Goela School of Finance, right? Financially empowering you.
Thank you.
Bye,
Thank
guys.
you.